Inflation has just hit 7% for last year, 2021. That is the highest inflation rate since 1982, back when we saw inflation well over 10% before that. And it's insane. If inflation gets out of hand, what happens is the $100 that you're holding is now only worth $93. It's still $100 in your hand, but you can only buy $93 worth of Big Macs from McDonald's that you would have bought $100 worth of in the beginning of 2021. Just imagine if that hit 15 or 20%, you're losing a lot of money really fast. If you go to work and say you make $15 an hour, all of a sudden you're losing $1.50 an hour if inflation is 10% a year. You literally are making $1.50 an hour. That's just disappearing to nowhere, just to an abyss. Early on, the government was telling us that this inflation was just temporary. They used the word transitory, something that was coming and would just pass right on by. Then they changed their opinion that it was not transitory, that it wasn't just going to pass right on by. Now they're letting us know that this inflation is probably going to stick around through most of 2022, and they're estimating, the government themselves are estimating, that inflation will be at about 2.6% by the end of 2022 and possibly 2.3% end of 2023. Those numbers are okay. Typically they want inflation right around 1.5%, 2%-ish area. That's what they would consider a healthy inflation rate. Let's break it down a little bit and see where inflation is actually happening and where possibly deflation is happening in the market right now. In the food sector, it has been inflated 0.5% over the last month. That means the apple that you're buying at the grocery store is now 0.5% more expensive. It doesn't sound like a lot, but that's just in 1 month. Energy is an interesting sector because in the month of December, energy deflated, meaning it actually dropped almost 0.5%, and it's cheaper in December. But in November and October, we saw huge increases in inflation percentages in the energy sector. So it's a little deceiving to say we saw 0.5% of deflation, but 2 months prior we saw incredible inflation. For an example, just in October and November, gasoline rose 12% over those 2 months. You were paying 12% more for gasoline in just those short 2 months. Then this last month of December, it decreased by exactly 0.5%. So 0.5% doesn't really recover from the 12% increase that we saw over a short 2-month period. Somehow used cars are still on the rise with inflation. They went up 3.5% just in December. Before December, we saw 2.5% inflation for November and October. We actually saw a little bit of deflation before that. But dating back in June of 2021, we actually saw an increase of 10% inflation in the value of a used vehicle. 3.5%, not where we want it to be, but not as bad as 10%. Ideally, those numbers eventually are going to drop when new cars come out more and the chip shortages kind of settle and wash away, hopefully. When you look into this deeper and you dig a little deeper, the things that are inflationary right now or being inflated in price are the things that need chips, items that are coming from across seas like washing machines, dishwashers, those types of things that are being made elsewhere and being shipped over, and there's shortages or supply chain issues that aren't being resolved. That is where the inflation is currently happening in a major sense. The other things are okay with their inflation, frankly, and doing just fine. So I am optimistic, actually, that into the future of 2022, we will see inflation drop down as supply chains, or if supply chain issues are resolved. If they aren't resolved, we're going to continue to see this inflation the same exact way we are right now. The supply chain issues are the problem right now. Jerome Powell from the Federal Reserve just spoke yesterday, and he shared that he can't control that supply. He can only control the demand with the interest rates. So it's really not up to the government with the supply chain. There are some things maybe they can do, but the supply chain is gonna have to figure itself out. The chips are gonna have to be made and caught up, and vehicles pushed out, and other items, just any items that are being produced and shipped long distances, they need to get caught up. Ironically, with inflation hitting 7% for the year of 2021, the stock market is optimistic. As you would believe, right? It's the total opposite you would ever think. Stock market is actually looking into the future though. They're looking at that 2.6% by the end of 2022. The estimates were that we would hit 7% inflation by the end of this year, recently when they released those estimates. And so it's not too much of a concern. Luckily, it wasn't higher than what we were estimating. If it would have been higher, I don't believe the stock markets would be doing as well as they are today. Something I just want to throw in there though is that the Feds are planning on increasing interest rates in order to drop that inflation to 2.6%. I don't know if people are just expecting the interest rate to drop on its own, but the Feds do have the tools that they can use, like Jerome Powell has always said, and I believe he will use those, and he will increase interest rates 3 times throughout this year, as he has said, if not maybe even more, maybe 4 times, and that'll help with the inflation. But it's also going to scare off a little bit of the market and Wall Street a little bit, and we might see some ebbs and flows in the stock market, so just be ready for that. Thank you guys so much for watching. Please, if you're not already subscribed, subscribe down below. It helps the channel out tremendously, and I appreciate it a ton. Thank you so much. Let me know what other videos you might like to see. Thanks, guys. Have a wonderful day. See ya. Bye-bye.